Good morning. Happy Wednesday and welcome to today's edition of Toggle's Daily Video Insights. My name is Jan. I'm the CEO and co-founder of Toggle. And if you like these insights, would like to see them more often, please subscribe to our YouTube channel, or else I would encourage you to check us out on Toggle.global, where you can also drive Toggle Copilot, our free intelligent investment dashboard that has helped thousands of traders with their tactical decision-making and trading. Today, we're going to focus on Verizon, a company that many of you are familiar with, obviously in part because of the ubiquitous phone ads that they've aired on national television, but also especially those who live in New York metro area for the Verizon Fios internet service. But today, the focus is going to be on their stock price. In fact, in particular, what Toggle is noting is that the yield level indicators for Verizon are quite close to a recent high, and that over the 15 occasions where it had similarly reached a high, you typically saw a correction in Verizon stock price. In fact, at least half the time, the stock price dropped about 6% or more over the following 6 months. What you can see here is that after the initial price of just around 60, the median projection was somewhere down to 56.75, but the paradigm would be violated and the odds of it holding dramatically diminished if you were to instead break through 62.31. What the important bit about this pattern is that what you're able to really see down here is that we've seen this kind of pattern repeat itself all the way through the global financial crisis. So it's a relationship that appears quite robust to business conditions and business cycles, and therefore a little bit more notable, which is also why this received a higher star rating in our qualitative assessment. Looking down at the very end, just to have a quick look at the other ranges, you can see that while 6 month was the highest quality range, that actually over the near term, there is also quite a bit of downside to the stock price, but the range and the downside appears to be largest at the 6 month mark. In fact, as much as 13% drop on the confidence interval. Finally, looking down to the very end, which is again where we like to look at for the risk reward, you can see that the return distribution is really quite heavily skewed to the downside, but equally importantly, the convexity of the trade, so the upside versus the downside, is really quite heavily skewed, because on the upside, there is about a 5% increase in cases where historically this pattern did not hold, and down as much as between 15 and 20% in some of those cases where it really sold off quite a lot. So much for Verizon today. In our daily brief, we also discuss the outlook and the next act for energy firms. If you have an interest, please, again, subscribe at Toggle.global, and otherwise subscribe to our YouTube channel, and you'll be able to receive these insights on a daily basis. Thank you for your attention, and we'll talk to you again soon.